Good afternoon, everyone. It's 20 past 6 here on Wednesday, the 8th of September, and you should get this in your inbox on Saturday morning coming. That'll be Saturday, September the 11th, a date that we'll never forget. I'm looking at VectorVest UK. Clearly this is after the close on the 7th. And as we can see, a very good situation in VectorVest UK. This may have changed a lot by the time you get this video, but nevertheless, short-term trend is up, underlying trend is up, and we have a confirmed up in place. As you can see, lots and lots of green on the colour guard, and after Monday's close there was a little black star in that green light telling us that the momentum is strongly up as well. Trend taking its foot off the petrol a little bit here, and VectorVest advocates caution when buying stocks at this time. If we have a look at the VectorVest composite, which the market timing is based upon, if I click on timing, if I go to the market timing chart itself, get rid of all my lines just so we can see the wood for the trees, we can see the VectorVest composite itself, and I put it up since COVID. There we go, and get all the clutter off the chart. This is the price of the VectorVest composite, an equally weighted index of all of the shares that we follow in the London stock market and on AIM. Down below we have the market timing indicator, and down below that we have the incredibly important buy-sell ratio, which is a measure of the breadth of the market, the number of shares in the VectorVest buy divided by the number of shares on the VectorVest sell. Both these are moving up. The MTI is at 1.45. Normally it becomes gets into an overbought position around about 1.65. The buy-sell ratio, very healthy, 3.17, and that also becomes overbought when it gets above 4. If we have a look at this over a shorter period of time, I can see that this is rising, and momentum as measured by the market timing indicator is rising, and the buy-sell ratio is also rising. So we've got price rising and momentum rising and the breadth rising with it. Normally that means there's more upside, folks. Normally that means there's more upside. And as you can see from a price action point of view, this support resistance became support, and pretty much the same thing happened here, and pretty much the same thing happened here. So market doing exactly what it should do in an advance, coming back and kissing the last old top. So I'm reasonably positive, but no doubt we could see a little bit of a pullback. If there's a trend line down here, we can certainly pull back to that level, and maybe that started already during the course of today. So if I now look at over the last 6 months, and for the basis of this, I'm going to use, for the basis of this video, should I say, I'm going to use the medium-term market timing tool, the DEW, that I use for my swing trades. And the DEW has been up. It was down for a few days here, didn't come to anything, and the DEW turned up on this date, which was the 22nd of July. So it's been up for the last 6-8 weeks. So that's the DEW provides some very, very, very good signals for swing trading. So I just want to look at a chart, and I talked about it at the Q&A on Monday afternoon, but it's just, and I talked about it at a group in Manchester last night, but it's just such a good example of what I'm trying to do in my swing trading. First of all, as I've spoken 1,000 times to everybody, the most important thing is to know is whether the market is rising or falling. Everything follows from that. So if I click on DEW, I can overlay the DEW market timing signals to any share, and the DEW market timing signals has got nothing to do with Crichton's, save that Crichton's is one of the 2,200 shares that comprise the index. So if I do this, I can see that from this date, which we spoke about a moment ago, on the 22nd of July, the DEW was up, and it's still up. Okay, it's still up. So the market timing and the London market was coming to the party. I put on 3 moving averages, as many of you know, 21, 55 and 89. And where they all cross over, a character that I knew well on the floor of the New York Stock Exchange, he called that a bow tie. And it's quite an important trend change when they all cross over together. Very importantly, ladies and gentlemen, as this price rose, the volume rose significantly, and that is a characteristic of a bull market. It got well away from the 21 and the 55, and the market loves this zone between the 21 and the 55, and invariably it's going to pull back into that zone. The most important thing to note here is that on a relative basis, this pulled back on markedly lower volume. If you see a price rising on rising volume and pulling back on falling volume, that's the most basic characteristic of a bull market. And it pulled back in what technicians refer to as a flag pattern, which is, it's got that in cases a bull flag, and when it broke out of the bull flag at 110, then the upward move was certainly confirmed, and as you can see, the volume has risen, not quite as high as before, but the volume has risen strongly here. So we had a share that is showing a wonderful price and volume relationship. The trend is strongly up, the overall market is strongly up, but what really is important is the fundamental position, because as you can see, this share is growing earnings strongly, and earnings per share has risen in the period from April, and has risen strongly over that period. And that's the engine that's driving the share price. I think one of the most important things on VectorVest is this forecast earnings per share plot. Let's look at the VectorVest valuation over the last 6 months. There's the VectorVest valuation right up here. Make it a bit bigger so we can see it. So we have a share that's undervalued, that's growing earnings strongly. It's trending up. The overall market is trending up. So to pinpoint high probability trades, we need 3 things to come to the party. 1, the general market. 2, we want to be trading in the very, very best stocks, those stocks that have got a great combination of earnings growth and earnings safety, and we favor undervalued stocks, so that stock fits the bill. Then all you had to do was to buy it when the VectorVest recommendation went to buy. But a swing trade, a beautiful swing trade, was this pulling back on falling volume and then powering out of this bull flag. I know I spoke about this on Monday afternoon. If one was doing a course on technical analysis, of which I do plenty, then that would certainly have to be as an example. Everything coming to the party. If you are a perfectionist and you want to get this right about 8 times out of 10, then you need to tick those boxes. Sometimes volume is very difficult to see. In this case, it hits you right between the eyes. It's not always like that. But a share that's undervalued is very easy to see. A share that's growing earnings strongly is very, very easy to see. The market rising is very easy to see just by overlaying the DEW, and clearly we can measure the trend very easily by moving averages, or just simply the VectorVest buy recommendation. Maybe I'm making it too complicated by using the moving averages, but they help me. One of the beauties of using the moving averages is that it defines the trend, but it also defines a high probability entry to actually get in if you've missed the entry point down here, or to add to a position. If you'd bought it there, pull back into this zone is a really high probability place to add to the position. The primary technical characteristic of a bull market is not the moving averages, it's price rising and rising volume, pulling back and falling volume. If that's the case, then the probabilities favor it moving again, and certainly with the general market rising and with the fundamental position of the stock, I felt that that was a high probability trade that I would give 80% to. So I hope you enjoyed that. I look forward to seeing everybody at our Q&A next Monday afternoon, 1:30. Thank you. Have a great weekend.